As the market falls, we look to Gary Glover to shed some light on what the geopolitical issues can mean for market indices, whether it's further falls, rallies, what we do with the portfolio, gold, oil, industrials, what happens to the markets in this type of environment, and what can history teach us so that we can manage our portfolios better. That's a fair workload to put onto you this morning, Gary. How are you?
Yeah, I'm good, Chris. Yeah, that was interesting to actually understand that because if you look at Daniel Kahneman's sort of work, and it's all by randomness. We'll realize that most people will be freaking out when these events occur. But if you actually look historically, what these things mean is that hey, you actually should be doing the opposite of how you feel. And so, a couple of great examples are like the 24th of February, 2022. That was the date that Putin, basically invaded Ukraine, and that was the date. That was the date of the low. So because it's almost to say to you, hey, look, Russia's just invaded Ukraine, going to war. You think, I probably should sell part of my share portfolio and just get out. Well, that was actually the day of the low, and then there was like 150% rally followed that actually low. And if you look at, we're talking about 2003, it's sort of big, kind of similar to that as well. I think it was the 20th of March, 2003 was when Bush announced they'd gone into Iraq. I think the market found the low like 8 days earlier. So, but you get all that fear running into it, so the market's, uncertainty, fear, and then by the time you actually, the conflict is announced or it occurs, that's the lows obviously either gets marked then or it can even get marked before then. So got to be careful about getting too negative, too bearish here in the face of all this bad news. And everyone's out there. I think Black Monday was trending on Twitter on Friday. So everyone was expecting, massive declines in markets all here. So what we've seen here is, I think the covered his bond short there, and then unwinding on shorts and stuff there, sort of going to cause some of the markets to have a bit of a relief rally here. So just got to be careful to get too bearish here. History tells us that when things generally look their worst, feel the worst, and then these big events take place, while everyone else is freaking out, it's usually the market often finds lows there and comes out of them. So that's the lesson. History tells us while everyone else is freaking out. So it could be a pretty good opportunity here. So I think it could be a trap here to be getting too short here, to getting too negative here. And I guess if you look at that sort of 70s chart there, Chris, I just highlighted that in the report. It just shows the volatility that can happen throughout those periods. So, markets are going up and down. So quite volatile throughout that period there. So, yeah, we can get some big swings both ways here. But the 40s and the 70s will just sort of shine up, get that sort of sideways action. And if we look at what's happening with our index in the past years, we get exactly that type of activity. So, I think it's going to be a mistake to be freaking out. Everyone else is freaking out here. So,
But definitely, you've mentioned possible fallback technique into what's going on with the volatility in the Aussie market. But we'll go a little bit chronologically because we've taken that into mind that the Russian market really hit flows just as Russia invaded Ukraine. And we talked about this a little bit last week, where you'd spoken from experience about trading into March 2003 and then the whiplash that the markets had as they roared on up after George Bush, which you've just pinpointed those dates. Where we
look at those US equities, Chris, they all look pretty negative. So the NASDAQ looks negative. They've basically put our sort of early October low now at risk. So it looks like it probably wants to go lower. I think the NASDAQ there is going to level around 12,259, which should be about 50% of the range. Also be equal to that early 2023 high as well. So that's probably a bit of a level that might come back into there. So, maybe we're not going to get an early October line here. Maybe it's a late October or early November. I don't think we're too far away here from this complex is sort of building. I think it's going to come sooner rather than later here. That might just might get a really short term sort of little panic turn here. So just gotta be careful here. I think people might get too bearish here at the low here, which is classic sort of human behaviour. So yeah.
Well, the NASDAQ's showing those sort of movements. You've got ABC, some critical points. The S&P500, the broader index, still coming back. And that, as you've highlighted here on the chart, the October low is still at risk. And that's also, if it does go through that, you're looking that it might sit on the high or maybe pull through to those bodies and sort of retest the lower region.
Yeah, that's a big level. Obviously the old high there. So look at sort of the high there and also the body as well. So got a few more touches there. So looking around those levels there. So look, it looks pretty negative. It looks like we're breaking a little channel here, but I just sort of know you're just going to be a little cautious there. Getting too negative here. So see how we hold up here over the next week or two here. I say that look, no doubt we're sort of that October low is risky, and maybe we'll sell up a bit deeper. I'm just sort of wary there that these sort of sell-offs here can be a bit of a trap here. So so look, it's tricky here. I think it's but yeah, I'll just be it'll depend on how long this sort of takes here, Chris. I think whether we're drag on here or whether the complex sort of comes to a sort of head pretty quickly here. So you can't see this thing ending quickly, but the date that it all starts, the conflict is announced there. That those are often sort of the lows for markets here. So it's going to be fascinating ahead here, but because history tells us not to get too negative here at these points here. So yeah.
Well, what we've looked at on the Aussie market, you have pinpointed and described the inflation that we just saw in the 70s, and we're kind of bouncing around, sitting under these resistance zones. The market's been just sort of slipping away. It's lost that. It was a bit of a weak one with a couple of touch points and worked under that trend line. Now it's kind of slipping a bit further away undercutting this low here. And what sort of next? Are you thinking the Aussie can be a similar sort of thing, a bit of a slippery slope like you described with the US? And
look,
could turn the corner?
Yeah, look, it is negative, obviously breaking that sort of trend line there. But you got to remember, we are in a sort of sideways orientated sort of setup here. So we're really looking for, to go back and test some old lows, and like the 70s there, like we're breaking to new marginal lows. And we're seeing it a lot of the top stocks as well. So I guess on that chart there, I think it was the 6760, I think might have been the previous sort of swing low, Chris. That was sort of the one I was looking at as a bit of a marker there for the XJ. So back in early 2020. So this might be a level to watch here. So again, just going to be cautious not to get too negative there. So just see a lot of stocks sort of already on their knees, sort of churning here. So just. I just think you're just going to be, going to be careful. Like, I know charts look pretty average. Everything always looks pretty, Sometimes like charts, I know from history, the charts can look their worst just before they turn, So although everything looks pretty bearish, pretty negative at the moment, just get the feeling here. That's the way it often looks there. Maybe, I'd say a week or two away from the low here. So, I think we're probably going to get a lower here, but I just don't see this being a big, long, drawn-out sell-off here. I think we might just see something short and sharp here in the coming weeks. I think that'll be it. I just don't see this playing out for the long term. The history sort of says once this sort of escalates, and then we get a kind of almost like an invasion date there, and that normally sort of marks the low there. So probably be keeping an eye out for that kind of event here.
Well, you've talked about the Dow Jones. You've got a couple of charts here this time. You've got the weekly that we've been looking at for some time. Similar pattern here, as you said, broken out of that channel, which is not good. It's not ideal. It's been slipping a bit lower. It's broken some swing lows. It's had a negative break and come back up. So is this the same sort of thing with the Dow and the lessons in the past to work from?
Yeah, look, it's sort of underperformance of the Dow compared to other third years and other pre-election years as well. So that's probably disappointing there. But I guess it's like, we know that within a higher inflation market, so you don't get that sort of trending market, so you get more sort of sideways action there. So it is sort of weak here, it is sort of breaking lower there, so it is a bit negative here. But again, I just sort of know that there's kind of large parts of the market have been negative for a while. There's a lot of stocks that are already sort of pretty badly beaten up already. So again, I think we'll probably go slightly lower here, but I just got to be careful not to get too negative here, because I just think we might sort of see another low here in the next couple of weeks. That's all. So which could be quite important as well.
Well, we're learning from the 70s, which you showed here before. That's inflation that we've kind of covered.
Yeah.
This is the period that you've highlighted where inflation was a concern, and sort of when the market roared up, that's when the CPI sort of dropped down a little. It might have come back in, the reading was higher, and that's a large driving indicator throughout this whole period. Is there anything else to take from this chart as a lesson?
Yeah, I mean, we had periods there, obviously, where inflation was sort of up and then we're sort of negative. Then the inflation started to cool and then we saw markets recover there. So in the 70s, they made the mistake of actually cutting rates too early. Inflation reared back, and then that, then they struggled to get back under control, and that's probably that ended up being a bigger negative in the market there. So, Powell's basically, I think they've made that mistake a couple of times in the past, cutting rates too early with inflation there. So it made it sort of clear they're not going to be doing that again. So that they'll probably keep rates higher for longer here. So we're just there's still plenty of people calling for rates to be cut here, but they obviously haven't read that inflation history, because they wouldn't be saying that if they read a few historical textbooks about inflation there. So it's just really important for the Fed to keep the rate sort of high here and just really get their foot on inflation there. So good news here is that all these sort of dampening effects we're getting will actually sort of slow things down a bit as well. So I just think you're sort of seeing that here already. So, but I just think you're sort of, I don't think we're going to see the sort of big deep moves we've seen there. I don't think the Fed's going to make the same mistakes here. I think Powell's rhetoric has been very consistent all along. Is that they sort of need to get to that sort of 5.5, somewhere around there, and they're going to have to stay there for a while until inflation, because inflation is sticky. It takes a long time to go away. It's just one of those things. It's just not a slow moving. It's not a fast moving sort of element there. It takes a long time to sort of turn the ship and get under control. Unfortunately, in Australia, we haven't really moved too far. That's why I'm still concerned about Aussie rates going higher here. Because, the rest of the world's pretty much got their rates at 5. We're still at 4s. So I don't know how we think we can be the exception to everyone else in the world. How does that happen? So and when we're actually in an economy there which is resource laden, so which basically with commodities and resources being pretty buoyant, means our economy is actually even stronger. So because we've got oil prices, gold's going pretty well, or iron ore. I mean, it's just it's pretty good for the Aussie economy there, being a resource-oriented economy here. So, so I still have a few concerns here that rates might need to go a little bit higher there in Australia. So, but that's irrelevant to markets here in some regards. But just all inflationary periods just sort of show that markets will sort of just keep the lid on markets here. So you get enough going sideways oriented. And I guess we're talking about precious metals, energy, value shares. That's the segment you want to be in. History says that your sort of small cap growth is sort of the weak periods. And if you look at we had the Russell 2000 there, that sort of had a pretty mean downtrend, gone sideways while the rest of the market has recovered. Now it's sort of breaking down here. This is why I've sort of been I see the small caps guys on there for the last 6-12 months here saying small caps are undervalued. We've had 2 or 3 bad years, time to invest in small caps. Well, you know what? History says no. History says do not invest in small caps until inflation has gone or is almost gone. So it's just going to be a tough area to be in. So we just got to be careful about investing in that sector. You got to be bang on the money. You got to be on absolute furloughs to make money in small caps there, because history says you're up against it here.
Well, that's a good one to take from it. And the Russell's a good indication in comparison to the other charts you've just shown us at the weekly scale that's still breaking down after consolidation and not being able to surpass the previous highs. So with that in mind, we've covered the Russian trading system.
Because it's amazing that, like, obviously we've cleaned out there, then we had a big bounce, 150%. Then we come back and make a retest of the low, maybe like a high low, and start building here now. So we're starting to see the Russian market actually build a bit of a base here, few higher lows, and now it's actually starting to break out. So while the rest of the world starting to break down, Russia's coming out the other way. So yeah, it's fascinating. But in terms of the datelines will surprise most people as to when markets go up and go down, and when they mark the lows and stuff there. So that's just Google the date of the Russian conflict there. It'll be 24th of February 2022, which is exactly the date of the low.
Odd. It's odd, but as you've pointed out, history does repeat itself, and to learn from that, we look for what to trade on the Aussie market. And you've said time and time again, and you've been saying it for a good couple of years now, oils or energies, gold, good value shares, which you've just reiterated. So one of them on the ASX and energy space is Santos. How do you see this performing on the market, and what's catching your attention on the chart?
Yeah, I guess the sort of, because the oil price has had a pretty good runs, obviously, the last 2 years, and it's been pretty buoyant, Santos there. But then obviously in the last sort of 6 months, you've seen a bit of that, as that inflation was cooling, we saw the oil price cool as well. But, Santos is largely, it's stayed sort of pretty tight here, really. It's sort of, the share price has been, it's that sort of David Ryan sort of style there, where you've got that congestion sort of underneath the high. So it really hasn't weakened off that much. That's a nice little handle there, a little tight pattern underneath the high there. So I think this can actually sort of pop up here. The only concern I've got, Chris, is that I think this might be short-lived. I think this might be, we'll get a bit of a break here, a bit of a pop out of the range here, and look, maybe go to retest that high there at 22. But I think it'll be short and sharp. So so I don't know if I'd be staying there longer term, but I think it's more of a short-term move. I'm always wary in September for the December. It's always a negative period for the oil price sort of seasonally, and we sort of started to see that, because obviously this Israel conflict is probably having an effect on that. But that chart still looks pretty. The stock has held up really well. It showed relative strength there. So I think we pierced that little high there. I think more than likely we go back and retest the 22 high. So just sort of, all stocks are still pretty buoyant here.
Well, that's Santos is one of the market's largest in the energy space. You've been bullish gold for some time. You've got into it in detail on the Friday podcast where we look at, or the interviews where we're looking at the leading momentum and the top launchpad companies. You've had them in your portfolio for a long time. What's Evolution done, and what's the update for your insights on it?
Yeah, I just sort of showed this stock here because I think this typifies most of, a large part of the gold stocks there. It's sort of, again, maybe while gold's sort of been going down here, most of the stocks have held up pretty tight and sort of gone, almost sort of sideways, and they just sort of flushed out like a little bit of a spring there. So, I think Evolution, Northern Star, there's just a host of them there that have actually gone and actually made a slight high and worked out to it, and then reversed here. And we've seen a sharp bounce in gold and the gold stocks here. We've seen a few stocks like Ramelius, West Gold, go to new highs as well. So it's just some relative strength there in the sector and the stocks, and it does look sort of pretty bullish here short term. And that's look, if we do get a conflict there and a bit of uncertainty around the world, that does sort of come to the fore for gold as well. So hence why I think we'll probably get a short term spike here in this here. But that looks, I think like a lot of the golds look sort of constructive there, but I think it looks like they can go a bit higher for me.
Well, another one in that space is Capricorn Metals. So another gold stock showing this sort of consolidation. And then you're showing that rapid movement in the last couple of weeks where it's got from the bottom of the range back up to retest that high. Is that, you've mentioned that you might,
yeah.
What's that?
Yeah, it's that kind of base building sort of characteristics there, got a few high lows sort of building in there, sort of tight overlapping, sort of struggling to go down, sort of sideways orientated and then sort of popping up here. Really where the market is showing weakness there, this is showing relative strength there. It's really close to the old high. So again, this is, definitely showing some strength there. I think once you pop through that sort of July high there, Chris, I think this market will probably, I actually think it'll get on year high. So, but again, I think, this will be sort of, I'm expecting to be sort of short and sharp here. So, so it could be, just over the next few weeks there, you'll see a bit of a sharp move here. But to just kind of typifies the environment we're in at the moment, obviously a little bit negative equities, positive for sort of gold and oil stuff there. But history tells us there that these sort of conflicts there, once they sort of start and sort of occur there, it's they do tend to sort of they don't drag out like everyone is expecting. And if there's like an invasion sort of date there, or conflict sort of heats up there, that usually sort of corresponds to sort of lower equities there. So it'll feel pretty fearful, pretty negative, but that's usually the time to be getting along equities normally.
That's good insights to know in the week or weeks ahead, depending on what happens internationally. But as the markets are falling, it's good to know there's a bit of a textbook or a blueprint that we've got from history to see what markets have done in the past and what people have done in previous eras when these sorts of things have happened before. So
it's usually when you see everyone else freaking out, that's when you know you better start buying a few things.
Yes, when everyone else is throwing the baby out with the bathwater, throwing their hands up in the air and said, this is all too hard, I'm out. That the ship can right itself and the market powers on as it has been. And noted in March 2003, it then started for Australia, the commodity super cycle that went on for years. So who knows what happens next, but you'll be here to help us out Tuesdays and Fridays to know what to look at and where to trade. Thanks very much, Gary Glover from Novus Capital.
Thanks, Chris.
The whole playlist for Fridays where Gary goes through the market leaders, momentum stocks and launchpad on the right, and deeper insights like he's just covered, false breaks, inflation, etc. on the right as well, and his X or Twitter handle over there on the left.